right, Jim, let's start with DoorDash. You were just talking about it with Andrew and Becky and Joe. Your point yesterday was great story, but be careful.
Well, look, I think that there are a couple of things that are going in favor of it. There are people who know the brand. When people know the brand, the younger investors just say, you know what, get me some. I don't want them to lose what discipline they have, because then we're starting to get into a 1998, 1999 period where they put market orders in, and whatever price you get may end up being the top price for the day. What I do think is important is people recognize that they're going to have easy comparisons for a little bit. But then, you know, when people can start going out again, they will choose to go out as much as they will use DoorDash. I don't think DoorDash goes away. I think that it's more of a duopoly than it's been before because of Uber Eats. Good business, great business. I don't know. It is still a delivery system. It's still they've had to make a suburban. They've made a suburban footprint, which is really brilliant. But David, in the end, we know that the moat is only as good as the fact that they have low prices and they've got good technology.
Right. Now, they've had very strong revenue growth. But to your point, Jim, this may be a unique opportunity that they've seen over this last, let's call it 9 months, in terms of growth. And the comparisons will get tougher. They've got to. A year from now, when hopefully we're all back to sort of normal behavior and people are not staying home quite as often and ordering in quite as much, you'd expect that will reduce. It's going to trade at a multiple to revenues that is going to be double digits.
I'm worried about
that. And I wonder how you view it from a valuation perspective. Obviously, great growth, huge market share, 50%, which you do also have to wonder how much bigger can you get than that?
Well, look, the one thing is certain, Carl, is that this newer brand of investors I've been profiling on Mad Money have a lot of capital. Now, a lot of people say, well, where did it come from? I don't want to even ask that. I just say they like things. And when they like things and they use things, actually the old Peter Lynch model from Magellan Fund for a long time at Fidelity, they're willing to keep buying. Look at Snowflake. I mean, when I speak to Frank Slootman, he's not sure exactly who his investors are, but he knows a lot of them are retail investors. DoorDash is used by a lot of younger people, both in the suburbs and in the cities. So I think that you're going to see incredible enthusiasm. I wish that people would use limit orders, but that is a parlance, Carl, that they don't understand. They don't get that.
Yeah.
Shepard Smith here. Thanks for watching CNBC on YouTube.